All right, so hello everyone. My name is Vikas Agrawal, and I'm the founder and CEO of AIF and PMS Experts India. So we are one of the largest platform for investing in alternate investments and portfolio management services. So at AIF and PMS Experts India, we run this show called Ask the Expert, and whole idea of running this show is to sort of invite the industry experts, ask questions on your behalf, and share more knowledge and wisdom so that you can create more wealth in your life. So with me I have Mr. Samraat Jadhav.
Hi, Vikas.
Yeah, hi. He's a dear friend. He brings about more than 2 decades of experience in terms of equity investing in India. And I'm glad to share that we've kind of worked together in our previous organization. When I used to work for Motilal Oswal, he was my colleague out there. And first of all, Samraat, many congratulations for becoming SEBI registered investment advisors.
Thank you very much.
And we are happy to have Samraat, and we've onboarded him on our platform. So we would be working closely with Samraat. So yeah, what I thought is, let me first introduce Samraat. So Samraat, as I mentioned, brings about 2 decades of experience. He has worked with large organizations like Motilal Oswal, where he spent more than a decade. He's also worked with JM Mutual Fund. And Samraat was always very, very passionate about equity research. In fact, when he used to work together, he used to throw up a couple of good ideas. I mean, I remember you letting me know that Bajaj Finance is going to be very large.
Very large. Yes.
Yeah, and I still remember, and thanks for your advice. This was, I think, 2011, 12 time.
Right.
So Samraat was very passionate about equity research, and he left the organization during the COVID time, and he has become now SEBI registered investment advisor. So he's the founder and CEO of Prosperity Wealth Advisors, and basically they run the various portfolios. So they have designed I would say not special but exclusive portfolio for our AIF and PMS clients. Like those who are our members will have an advantage and opportunity to invest in exclusive portfolio. So we'll talk about that also during the conversation. So thank you, Samraat, for taking the time out from your busy schedule.
Thanks, Vikas, for inviting me.
Yeah, thank you. So what we're going to do is I'll be asking you a few questions on behalf of our investors, and then we'll build on to it. Yeah. So my first question is, Samraat, what made you to become SEBI registered investment advisor?
Okay, so because as you mentioned, that around 2 decades of my experience when I used to travel across various cities, towns, and do a lot of events across. So I found there is a huge gap between investors who actually want to invest a larger sum of amount. Okay, and there what happens is with that gap, generally see you have a mutual fund which you can invest around 10, 15, 20 lakh rupees, and then people stop there. The next product which comes is direct PMS or an AIF, which starts with 50 lakh rupees and 1 crore and above basically.
Right.
Now the gap here, which is from 20 lakhs to 50 lakhs, there is no product available. And that basically clicked me up, saying that okay, why not have an advisory services in such a way, or have a portfolio where we can help those set of clients, because India is growing. Okay, India is a developing nation, and a lot of mid-time millionaires are adding up into this section.
Right.
And the way it has been adding up, there should be a product to serve such set of clients. Okay, and that got me an idea, and then we got into a process of registering ourselves into SEBI as an investment advisor, and then we got into portfolios.
Right. So talk to us about Prosperity Wealth Advisors. So how you built up this organization, how many people are involved in equity research, and what do you do basically at your organization?
So basically, Prosperity Wealth Advisors, the idea behind it is we always wanted to do something different, not as a regular fund management ideology or a fund management theorem. So what we went is, as technology is upgrading, okay, so we got into a newer set of technologies known as artificial intelligence, machine learning, and data science. So all this basically fall under the purview of data science. And what happens is, when the participation in market increases, a lot of data pumps up accordingly.
Right.
Okay, and we all know that from 3 crore to 6 crore, 7 crore of demat account, which happened in just a span of 1.5 or 2 years time. There's a huge data which has been pumped up. Now to analyze this data and understand what kind of portfolio, what kind of stock has to be there, how the market will perform, okay, it becomes difficult. So this data science actually helps us to understand and articulate the exact kind of stock ideology to pick up and give it to the client accordingly. So that's the reason we do entire thing through artificial intelligence, machine learning and data science. And we are very proud to say that we are India's first and only advisory service doing having these advanced technological tools for stock picking as an ideology.
Sure.
Okay. Into research, see, majorly we have a universe of 300 stocks. We don't do any kind of research beyond these 300 stocks, which have been filtered through a lot of data science ideology and purely based on the fundamental factor, because you can't go beyond fundamental. That's the base. Okay, that's the foundation of any stock whichever you pick across.
Right.
Okay, and on that basis, this 300 stock universe, and then we identify and run through our machine learning algorithm basically, which gives us an ideology that this stock should be there into a particular portfolio. Okay, and about the fund management team, we have 2 people into research. We have our backend team, operation team, which basically helps us under our guidance, and due to machine learning, because of the data runs basically runs through computers.
Right, that's great, wonderful. So just wanted to understand, how does it work? Like for example, let's say you have Nifty 50 and you have 50 stocks. Now when you analyzing these stocks with help of your machine learnings, how would you end up investing in companies? So what are your selection criterias like?
Okay, so what we do is, as I said, we have a universe of 300 companies. Now these 300 companies basically go through a funnel of different activities. Okay, so there is an institutional data which flows in. People, higher institution people buy stocks at various levels.
Right.
Okay, so that data flows in. A lot of social media data flows in. Okay, and we have got our own concept known as favoritism. Okay, so nowadays when the participation has increased, favoritism as a concept in stock has been increased. So if the stock is not favorite of market, even if fundamentally it is a fantastic company, it will not perform. Because finally, if you see any stock has only 2 things into it. One is the value of the company, okay, and the second is the price. Value obviously will change according the fundamentals of the company. Okay, so if the projected revenue goes up, if some new kind of decision happens, the value will change. But the important factor where 90% of people who chase a particular stock is because of the price. The price goes up, price goes down. Okay, that is nowhere related to the value of the company. Now what happens is, when the value is good, the stock price change purely onto the favoritism fact. If the stock is not favorite of market, it will not perform. We have a fantastic example of ITC, which was not favorite, and when it became favorite, it just doubled into size.
True.
Okay, we have a very fantastic example of Pidilite. Okay, fundamentally fantastic company, but not a favorite of market, not performed at all. Okay, HDFC Bank is also one of that example which has not performed accordingly. So what happens is, due to this funnel and favoritism, the identification of stock at the right time, I will not call it as a right time obviously, because that's a very vague statement, but at least not at the right time, but near the right time, we can at least add the stock into the portfolio and get a better alpha than other fund managers accordingly.
Right. So one disclaimer here, my dear audience, that
stocks,
whatever stocks that Samraat talked about, it is only for the example purpose, and more from an education point of view. And when you are investing, please talk to your advisors.
Right.
So coming back to this topic of advisory, SEBI has gone and regulated this completely. So as far as our regulator is concerned, you have alternate investment funds,
right,
which got regulated in 2011, where minimum threshold is 1 crore.
Right.
Then you have portfolio management services that got regulated in 1993,
right,
where minimum threshold is 50 lakhs rupees. Then you also talked about mutual funds. So mutual fund got regulated in 1996. Of course, mutual fund to sahi hai, as most of the investors have really created good amount of wealth.
Correct.
I mean, you look at the worst of the worst fund, even they ended up delivering at least 15% CAGR for 10-20 long years.
Right.
Now you talked about one segment where we see good amount of growth. You talked about more than 7.5 crores of demat account have been opened up in last 2.5 years, to be very precise, post-COVID. And a lot of investors who are participating in equity markets are paying a lot of attention and really want to participate in Indian capital markets. Now that is where SEBI came out with this thought process of organizing it, regulating it, calling it SEBI registered investment advisors.
Right.
So I am here to talk to you and understand how does it work, how this regulation is going about it, and what are the do's and don'ts here.
Okay. So SEBI came up with this regulation, okay, for a very basic reason, saying that nobody can just go out and say that, okay, subscribe for this particular stock or buy this particular portfolio, okay, because it should go under a rigorous process. The particular person who is giving this stock ideology should obviously go through a particular examinations and a registration process through SEBI with a lot of compliance and factors. Okay, so SEBI has obviously regulated it very well. Okay, there are exams to be passed on, not only single but multiple exams to be passed on, and then you need to go into SEBI, give all those documentations, register yourself. There is a net worth criteria, okay, accordingly. And once you undergo that process, okay, so it's the same like a military drill process. Okay, so you go through the army drill process. When you get registered, then only you are allowed to give an advice on the particular stock, okay, or a particular portfolio.
Right.
None of the person who comes or just gives you an advice randomly is not allowed as per the regulation. Okay, and there are a lot of factors also in terms of charging the fees, giving the portfolio recommendation, having the rationale behind that particular stock. So everything is very well regulated by them. Okay, so that's how it basically works.
So that SEBI also says that, you know, until unless you are SEBI registered investment advisors, you are not allowed to give any recommendation, advice. Now, what is research analyst then? What is how RIA is different
and
from?
RIA is different, right? Okay.
Then RIA. Yeah.
Yes. So RIA, in an RIA concept, that is a registered investment advisor concept, you can actually give a portfolio with a percentage of allocation to a particular stock. Okay. In a research analyst, you can only give recommendation of one particular stock, okay, with a research report or a research rationale attached to it. Okay, now that rationale can be anything. It could be fundamental, it could be technical accordingly. Okay, so that is the difference. Also about the fee charging concept is also different for an RIA and RA. Okay, for an RIA, you can't charge more than 2.5% as in total fees. Okay, or yearly. Okay, and that also you can't basically take 1 year fee in advance. It's maximum 6 months, which has been allowed by the regulator. Okay, so 1.25% is what you can charge maximum, or 1,25,000, whatever is on the minimum side. That depends upon the portfolio manager, whatever his rules and regulations fit into accordingly. But this regulation is accordingly. For an research analyst, it is totally different. They can go into a fixed fee model. Okay, they can charge a fee on quarterly basis, monthly basis, day basis. Okay, so that stock idea wise basis, research report basis. Okay, recommendation basis, accordingly they can charge.
Sure. Now, thanks for highlighting it. So you said that, you know, so like in our case, what happens that mostly our clients, they typically invest in PMS. So what happens in PMS, because you share the power of attorney with the portfolio manager,
Correct.
they deduct all the fees and expenses from the fund.
Right.
Now in this case, as I learned from you, is that you will have to make the separate payment.
Right.
So how does it work end to end?
Okay, so there are two good things about advisory services. One is the execution part. Okay, so here the recommendation is goes directly to the client. So client knows what I need to buy at what particular price and at what kind of allocation. Okay, so if a particular stock is in a portfolio is allocated for 10% and we are giving a recommendation for 2% right now, so he is also in a thought process that I am going on a right track. Okay. The second factor is about what you said is about the fees which is being charged.
Right.
Now in a PMS or an AIF criteria, what happens is it's all deducted from the fund itself.
Yeah.
Okay.
Right.
Here it's
at the fund level.
At the fund level itself. Here it's an additional fee which you need to pay. Okay, separate basically. Okay, and that actually gives the clarity to the client also. Okay, how much I am paying. It's a very transparent mechanism.
Right.
Okay, so when I say that, okay, I'm going to charge 1.25% of your asset under advice, so he knows that, okay, I need to pay this much amount as my fee, and this is what is charged, and this is what my portfolio has been performed. So when he himself executes the portfolio at his end, the execution happens at his end, he can manage, he can track his own portfolio accordingly, and he knows how the portfolio is growing at his end, which is not very well with other products basically.
Right. So here the execution is actually in the hand of
Investors, right.
Like you are giving the recommendation.
Correct.
And how frequently it is.
So it actually depends again upon the portfolio strategy. Okay, now when we are talking about an exclusive portfolio
Exclusive, yeah.
Okay, so here we have 80% allocation to large caps. Okay, so here the recommendation will be purely depend on our artificial intelligence platform, how it comes, and the allocation which has been given. And it again depends upon when the customer has come into the system. Okay, so when he signs up, let's say he signs up at when the market is all-time high, so then it is very difficult for giving a recommendation. Okay, or that particular stock which is standing on all-time high. Okay, and if a particular customer signs in when markets are flattish or depending upon the stock, so every investor which signs up will have a different kind of performance. Okay, in this.
Right. So the recommendation goes to client.
Goes to client directly.
And the client will eventually speak to his stockbroker.
Right.
Irrespective of whoever is the stockbroker.
Yes.
And then execute the transaction.
Execution.
And
yes.
then share something back with you, the contract.
Yeah. So the process flow is very simple. What we do is we recommend to the client on an email and on other communication medias. Client executes it. Okay, and the next day he basically shares us a contract note. So why this mechanism as sharing a contract note is ideology at what price that particular client has brought. So we manage the portfolio at our end, so we can also understand if Mr. A has brought it at this particular price. Okay, at this particular price when the selling recommendation goes. Okay, it goes accordingly if we know the price at what it has been brought. Okay, so the process flow is very simple.
Okay, so it has a relevance of the price in which the client has bought.
Yes.
A, and B, it also you maintain the record in as to generate the CAGR returns of the portfolio.
Yes, according to the
you
client.
You have a mechanism where client can see how much is the CAGR returns.
Correct. Right.
Okay.
So that benefits the client on a larger side basically. It could happen sometimes that a client forgot to buy the stock at that particular day. He can buy it on the next day. Okay, let's say if the recommendation goes on Friday, so he forgot. Then we have a Saturday, Sunday, and then Monday he executes the order. Okay, then he can share the contract note on Monday evening or Tuesday basically. But then the price would be different for him. Okay,
so how much does it affect Samraat? Given the opportunity, you have both the opportunity available at a client level while managing the exclusive portfolio.
Correct.
How much you think it can have an impact?
So what happens, the beauty at our recommendation is we give a price range to buy. Okay, so if I am giving a particular stock A, okay, and I feel that it should be brought today and the price is around, let's say, 1020 rupees. So I will obviously say that buy in between 1020 to 1040. Okay, so that's the best part of it. So the range will not vary as much. Okay, there is a 2 or 3% upside which has been given accordingly.
All right, I think this segment is particularly growing very fast in India, and one good thing that I'm witnessing is that clients are coming forward and paying for good advice.
Right.
You know, there was a time when financialization was happening and people were not so comfortable with it, but over a period of time I think our Indian investors have also become more mature, and when they really see their wealth growing, they don't mind paying fees, because eventually they pay fees, but at times it gets in mutual fund, it gets adjusted through NAV and they don't get to know about it.
Right.
But eventually they're paying.
Correct.
Or you talk about PMS, it gets deducted the fund level. In AIF, it gets deducted the fund level again. So in PMS, it gets deducted the pool level of and the demat account level. So yeah, so clearly I think this is a very good initiative by a regulator that they are structuring this industry. So any Tom and Harry cannot come and tell you that you buy this stock because I am telling you, and there is a proper mechanism in which you have to follow these.
Correct.
How does the audit takes place? So how it is regulated? Can you just talk about that also?
Okay, so there is very stringent and strict audit for it. We have our internal auditors, then SEBI has appointed an external auditor for it, and then the final audit of SEBI also is there. Okay, so we have to go to three auditors.
Sure.
Okay, so that's why So that's why I said
Which is
it's
good,
an
yeah.
army drill kind of thing.
Right.
Okay, so we need to maintain everything, right, from the KYC of the client, the recommendation which is been sent, and what date, what time, okay, at what price the client has brought it, how the portfolio has been managed, what is the rationale behind the stock idea or the portfolio. So everything has to be recorded and kept, and it is been audited by the regulator itself and the other agencies also.
Excellent. I think I spent about 2 decades in the industry, and what I've learned over a period of time is that SEBI is like a father of the industry,
Yes.
and when they bring in these kind of regulations, initially people find it a little difficult,
Right.
but then eventually I've seen that you look at example of AIF when it got regulated in the year of 2011.
Right.
The size of AIF today has grown
Right.
almost 60-70 times. Today it has reached to 6 lakh crores,
Right.
the total asset under management under the AIF platforms in India. You look at mutual funds when it got regulated in 1996. Today the size of the mutual fund has reached to 40 lakh crores. So obviously when it gets regulated, that how much fees you are paying,
Right.
and whether the portfolio manager deserves that fees or not,
Right.
and you evaluate the performance.
Yes.
So what is the time frame investor should look at when he's signing up with you to be able to see the alpha coming in?
Okay, so signing up with us, I would suggest that a minimum period for 3 years, okay, and 5 years across. Obviously, you will see a fantastic alpha coming up with Prosperity Wealth Advisor, because the best part is all our portfolios are actively managed, and that actually helps us to have an extra alpha than other funds.
Right. Just want to add one thing here. Just because client is paying fees in every 6 months time, half yearly, that does not mean that the portfolio would also be in line with his expectation.
Sure.
Because markets go on their
Market
own
fluctuations,
fluctuations, and obviously there will be time, like for example you look at last 1 year, equity market has the benchmark ended up delivering 0% return in last 1 year. So there will be phases. So that is the time you need patience, and you need to trust the portfolio manager to be able to, or SEBI registered investment advisor, to be able to see that alpha coming in.
Correct.
So I think if we don't have the patience, we are not the eligible client, I would say, for these kind of advisory. So when you are really subscribing, my advice is that please think twice, because there will be a time when portfolio may underperform, and then you still have to pay the fees.
Sure.
So because it happens that sometimes client expects, and there's nothing wrong in that they expect that when I'm paying fees, it has to perform quarter on quarter. But unfortunately, equity returns are not that linear that you get returns every year.
Right.
There are times when you have to wait even mutual fund or in PMS or AIF.
Anywhere, basically.
Right.
So if the wealth is only made by people who have patience, that's what we know since the 50 years.
Absolutely. Well said. So now we'll last few minutes to go, we'll talk about two things essentially. One, that since we have designed this exclusive portfolio for AIF and PMS clients, what is the thought process behind it, and then we'll conclude the session by taking your views on the markets.
Sure. Okay, so the thought process behind building an exclusive portfolio was very simple. Markets from here are looking fantastically well for the next 5 years. Economically, we are expecting that from a 3.5 trillion GDP, we are moving to a 5 trillion of GDP. I think we'll move more than that also.
Sure.
Okay, and we all know that in this, the participation will obviously happen by the larger companies, bigger set of companies, and because there is a simple thought process behind it. When we call it a large cap, we have allocated around 80% of large cap to an exclusive portfolio. The reason behind it is the companies are very well managed. The first thing which we look in any company is how the management is there. What is the track record of the management? Okay, are they clear about what they are doing and their business? So if that is very much clear for them from the management perspective, obviously it comes to our limelight. So management should be very good. The products which they are selling, okay, do they have that economic moat onto that product? Whether it is a pandemic, because we had a fantastic learning in pandemic.
Right.
So these companies survived and have grown bigger from the pandemic perspective. Okay, so the product have an economic moat or not? Where will their product will be subscribed or taken or brought by people, whether it is a recession or not? Okay, it's going on. at any stage basically the product will obviously run. Okay, so that's the second important factor for all these big companies which will come into picture. Okay, and the very important factor for any kind of stock is what kind of revenues they are making. They are making it year on year revenues. Okay, they are adding up into their revenues. They are doing a lot of innovation in their product line to have a lot of other products to begin, and their revenue alpha gets added up. So that's a very important factor for us. And the last and very important factor would be the debt. So if the company is high into debt and very difficult to manage, so it's very simple. Okay, if I am earning 100 rupees and I am paying 90 rupees as my interest, okay, from my balance sheet, it does not make an idea to invest into such companies. Okay, so such companies are out of our purview. Whether they are making all-time highs, we stay away from them. Right. Okay, so that's the reason for an exclusive portfolio for an 80% allocation, because from here we are going to move towards a 5 trillion and plus economy as a country, because it's very simple. Our cities are growing. Okay, our people are earning into wealth. As I said, the mid-tier millionaire people are increasing. Right. Okay, and my states are increasing. If just to add up, in 2005, the entire India's GDP, okay, was equivalent to the Maharashtra GDP. Okay, and today Maharashtra GDP is equivalent to the India GDP of 2005. Okay, so likewise, if you say the state, if you have one state and we have multiple states adding up into it, if we even have 5 states, so India itself will grow 5 times bigger. Right. So the I can say the participation into equities, the wealth creation story is humongous. It's huge. Okay, participation through equities will actually create fantastic wealth for every individual across.
So Samraat, here the question is, let's say I sign up with you as a client and start with 25 lakhs is the minimum, right? And let's say I start with 25 lakhs rupees. Can I also do SIPs, because you're buying these large cap, unique, with lot of competitive advantage in the businesses? These are, in our language we call it economic moat. Right. So when you're buying these moated businesses, can I also do add some more money on a monthly basis?
Okay, so yes, obviously you can add additional money into through an SIP mode also. So you have one amount which has been given to us to manage, and accordingly you can also add through SIPs. So when you go into an SIP model, we give recommendation to a particular stock accordingly on that particular day whenever the SIP basically hits it.
So it gets added up in the same portfolio?
In the same portfolio, yes.
Okay. So let's say I sign up with you, initial amount is 25 lakhs rupees, and then say I want to add 1 lakh rupees in those high quality businesses and hold on to it.
Correct.
I can continue to do so.
You can continue to do so.
Right.
Yes.
And do you also take, by the way, cash calls sometimes in the markets?
Yes, obviously those are needed. Okay, because a lot of time it happens then when we feel that,
like for example during the Ukraine war time in the markets.
So when you feel that there are such kind of black swan events or events which will take a larger time basically to solve and understand what actually is going to happen there, or how it will impact the markets or the basically large caps. So then we take a call accordingly to we sit on cash, we wait, understand, and then only invest accordingly.
Okay. So I think it's a wonderful idea that you buy these strong businesses, and then you should also do SIP.
Right.
It's like a direct stock SIP
direct
kind of
SIP,
you keep accumulating it, and clearly if these businesses are going to deliver good earning growth going ahead, obviously you see the same thing reflecting in the price. There's a saying that you make as much money in the stock market as company makes, and stock appreciation is nothing but the slaves of the earnings.
Sure.
So clearly I think it was great talking to you, Samraat. Thank you so much for sharing great insights with all our viewers, and I hope all of them are going to appreciate that. If you like the conversation, please please click on the button like, and please share it with your friends and family also. And in case you would like to subscribe these services, please reach out to my team at aifpms.com. Thank you.
Thank you.